All right. What's going on, you guys? Hope you guys are doing fabulous. We're gonna do some live trading, and this is gonna be recorded and shared with y'all. So, market just opened. We just rejected off this liquidity zone. We had a buy signal here, and we also had a sell signal up over here, which is nice. Super good stuff. We had a buy signal here too. However, I wait till the 931 candle, and I'm just gonna wait till price gives us a nice move up or nice move down at 930, which in this case it came up and took out a liquidity zone. So let me go ahead and I'm going to go down here. I'm going to turn off the signals for right now, just because I like to go off my confluences. And you could definitely use signals as a confluence. You could absolutely do so. I'm going to go ahead and go to the Forex Factory. Let's see. So July 14th, that's coming up soon. We have CPI coming up. And then we have basically nothing today. No news today. We have this, but basically nothing. In the morning, we actually had some Canadian news. Negotiators environment. What is this right here? Okay. De-escalate. Okay. We'll see about that. All right. So basically, price came down in this liquidity zone. We had a nice rejection right at 930, 929 even. We're just going to simply wait. And what I like to do is maybe give myself a little bias for the day. However, I just straight like to go off the liquidity zone indicator and basically just look for a nice setup. Let's look at the 15 minute. We have liquidity zones on the 15 minute. We also have some liquidity. These liquidities down here, these lows inside London session, and we just swept London high. Let's see if we keep on pumping, or we could get a nice little retrace here. We have a lot of these liquidities here, and basically when I see these liquidities stacked up, I could see these getting taken out. And since this one right here is small, really small, 3 points, I'm just looking for these to get swept out, right? Not really rejected off. I just want these to be swept out. We'll see what happens. But I like to look at 930 to 11:30, or sorry, 9:30 to 11 o'clock Eastern time. That is my trading window. I'm looking for the first two zones during that time to reject from a zone, right? The first two zones. The reason why the first two zones because after 9:30 open, the volume is extremely high in New York session, and price is really attracted to these liquidity zones, and these act as a magnet within the market. So you guys go ahead and see exactly the first two zones are really prominent when it comes to New York session. We're simply just going to wait here. And it's all about being patient in the market, not trying to, take some meaningless trade. It's got to make sense to you. It's got to go ahead and follow your rules, follow your strategy, follow your plan. So that's what it's all about. My reel's been popping off. Oh my goodness. I don't know if you guys been seeing the Instagram, but pretty crazy. I mean, one got 100K, 101K, the other one got 118K. Damn, not bad. Literally 700 followers in a day. That's actually crazy. Maybe a record for me. But yeah, so basically, let me show you a little bit of this indicator. So not only it shows you our liquidity zones with our buyer and seller dominance, however, it also shows change of character. When price creates a low and then price breaks, creates this high here and then creates another low, and then price comes up and breaks this high here, this counts as a change of character. And basically that means that we're switching the trend. And if we actually go ahead and go in settings here, scroll down to color candles by trend, turn this on, we could go ahead and hover over the chart like this, and we could see that we turn blue here, which indicates a bullish market. So if we see here, we turn bearish and then to bullish because we change a character, and then we change a character here, which led us to bearish market, and now we're inside a bullish market because of this change of character. Does that make sense? So I'm going to turn this off because it gets a little bit too distracting if you just keep on hovering over. But shows that market structure. If we actually have a new thing here, fade zone opacity on touch. So if you turn this on, and I'll leave this at 5% per touch, but each time it touches a zone here, it's going to go ahead and get lighter. And just so you guys could see, let me turn this maybe up a tiny bit. And as you can see, so this zone here got lighter because why? Well, price tapped into it here, showed a nice little rejection here, and then one more time. You know, the more liquidity zones are used within the market, then the less they're likely to hold out later on. Right here, price came down, rejected off, got lighter, came back, got even more lighter. This one, we rejected off, got a little bit lighter. However, price could still come down and reuse this again. It could. However, chances are lower. So pretty cool right there. You could always adjust this however you like. If you want this at 10 for the opacity, you could definitely do so. And we also could change the colors, everything like that. Scroll down here. We already talked about color candles by trend. 3 signal modes, that by the way. So zone rejection is basically when price gets inside a zone, shows a nice little rejection from the zone, and it will signal. So like for example, right here, it showed the rejection, right here signaled. This one right here, structure retest. This works amazing in a trending market, and I recommend this in a trending market. So right here, after this break of structure, we became bearish, right? Well, we were already bearish because we had to change a character over here. Right here is when we turned bearish. However, we had that break of structure, confirming the trend lower to this liquidity zone. So price came right back here, and it will signal on the break of structure retest. Then target a liquidity zone. There's that right there. Scroll down here, we have IFVG. So basically, when price taps inside a zone and shows a nice rejection, it will look for a fair value gap to get inversed. So for example, like this one closed, this one was a 930 candle, a lot of volume came in. However, usually once we inverse this gap like this, it will signal here for a long position. So pretty nice stuff right there. And if we scroll down here too, and if we go ahead and look at the sessions, we have sessions, and then we have SMTs. So this will show SMTs within the market. If you're on futures, I don't really, you don't really necessarily need this if you're on Forex. However, if you're trading gold, you could put like silver and kind of see SMTs within the market too. But yeah, so this shows S&P 500, and it shows the highs. Right here, we had an SMT, which brought us lower. Then we change a character and actually change structure. Now, let me go ahead and turn this off. So let's just see what price does. So we're getting close to this zone here. And since this zone has been used already, I'm not looking for a trade. I'm looking for a new zone after 931, basically. So why 931? Because remember, 930 has a lot of volume. I'm not going to trade on the 930 candle because it's basically like a manipulation candle. So let's see if price takes out this zone or shows a rejection. And we already showed a rejection already. However, probably going to get one again here, as you could see, because that's how liquidity zones work. You could either see rejection, or you could see price go ahead and sweep out liquidity, which count as a liquidity sweep, right? So one of the two things right there. And we're getting a nice rejection. And depending on the trading style, if you do want to take multiple zones, like, that have been used, then you can definitely do so. You could definitely do that. However, I just like to wait for a new zone after 9:30 to 11 o'clock a.m. And it's all about being patient here. If you're not patient, then you're not going to catch, you're going to catch some bull crap trade. And you don't want to do that. That's how people blow their accounts. That's how people go ahead and lose profits and everything they made. So you want to be really patient and wait for that exact setup. And right here in this case, if you want to take this zone again, you can absolutely do so, targeting a fair value gap like this. I feel like a 101 would be pretty decent. Something like this. However, and look at this. So, yep, right there. 101 would have hit. Stops right below this rejection candle. There's your 101. And you could definitely take this. I would have taken this, but we already used this already. I also want to talk about zone visibility. Some people get confused about zone visibility range. Basically, wherever price is at right now, you could see liquidity zones 350 points away, right? So, for example, if you want this at a 500, okay, so you could see liquidity zones that are 500 points away where price is right now. So does that make sense? So basically, if we look here, now you can see more because it's 500 points away. That's simple. If we go into the settings as well, max zone history, so it shows the history of 100 bars. I like 100. I like to keep it at 100 because if you put this on 1,000, let's just say 1,000, hypothetically, you're looking at a liquidity zone 1,000 candles away, like 100 bars away. Like it's too long ago. It's too long ago, right? So I feel like 100 is nice. And then max zone size. So depending if you're a swing trader, you want to put this up on the 15-minute time frame. Your targets and stop loss will be more bigger. So in this case, you would have to move this up, maybe like 400 or 350, depending if you're a swing trader. However, I like to keep mine on 200 or 250 if you're a normal day trader. I'm just gonna keep mine on 200 because if say if you're trading the 1 minute time frame, I always stick to the 1 minute time frame. And look at this, by the way, you could also targeted this fair value gap, and we're already starting to reject off of this. When it comes to my trades too as well, I like to target fair value gaps or highs within the market. Sometimes too, I always see price. This is just on my experience. Sometimes I always see price get up to a high and reject from it. So I like to keep my TPs just slightly below the high. Does that make sense? And if we could inverse this, we're likely to go ahead and see these highs maybe possibly getting hit or getting near it if we close above this. And this would have been a solid trade. However, we already used this. If price did not use this yet, I would have definitely went long here. And if we manage to get to this high, and if we keep on running up, then we could definitely sweep out these liquidities up here, right? Since they're small, since they're really near each other, I like to see these getting swept out. And look at this. This is just perfect. Look at this. Imagine catching this. It's 1 to 3 already. And if you get near the high, it's about 1 to 3.5. And right here, a liquidity zone just popped up. Okay, so when you see a liquidity zone pop up right where price is, okay, you're going to wait for a breakout first. So you're going to wait for price to break out, close outside the zone. Then once price gets inside the zone, that's where I look for rejection. Okay, some people do get confused about that, and I'm glad I'm going over this because so I could show you real time. If a liquidity zone opens or appears out of nowhere where price is, then you're going to wait for that breakout first, then enter the rejection on the retest. Now since we're inside the zone, we might get a rejection. However, we could definitely probably maybe sweep this out too and hit this high, but chances are we're going to kind of stagger around inside this for a little bit maybe before hitting this high. But we're just going to go ahead and see what happens. And again, being patient is what it's all about. As you're on the charts and as you see price kind of react to these zones, the more you're going to be able to tell what is likely to happen. It's just based off experience and based off exactly who you are as a trader, right? If you analyze and, if you overanalyze and if you underanalyze, honestly, oh, there we go. We just swept out the high. Now let's see if we could sweep out these liquidity zones. So we did get a reaction inside the liquidity zone for a second, for 1 minute, but then we ended up sweeping it out, which we swept out this high, which is this target from this liquidity zone as our long, right? But yeah, so if you make things simple in the market, right? Make things simple for yourself, because if you overanalyze everything, things are going to likely get complicated for you. And the thing though is for me, I just like to stick on the 1 minute time frame, look for the first 2 zones that appear for rejection, okay? Not for a liquidity sweep, but for rejection. So we're looking for the first 2 zones. And this could be a solid long here. This liquidity zone just popped up, 83% buys here. If we likely see rejection like this, I'm going to take this here. Whenever you trade, you always want to make sure that you wait for the right setup. Again, right? Always wait for the right setup. Let me go down here. I'm going to turn this off. All right. So we're getting that rejection. And I always like to kind of check ES, see what it's doing. ES never swept out the high. We actually have a bearish SMT here. However, that is a-okay. I mean, we're following our rules. We're waiting for a liquidity zone to appear and show a rejection off from it. So let's see what happens here. So two things, mark my words here. So price could either come down and reject off of this zone right now, or price could continue up, rally to take these liquidities out, or maybe even a couple liquidities and come back down. Let's see what price is likely to do. And when it comes to seeing these liquidity zones, always remember price could sweep it out or could reject from it. And these always act as what? Magnets within the market, right? There's a lot of people too that revenge trade. If you revenge trade, bro, it's the worst way to blow an account or lose money. There's one swept. And normally I wait for the first two that show rejection after New York Open. And right here we are getting rejection. However, just because these are so small and based on my trading experience, I do like to just wait. Let's look in our 5 minute. We actually just swept out these highs. It's not bad, not too bad. And ES looks like we SMT too. But this right here is a nice short though. I'm gonna go and take this here. And we actually already hit that fair value gap. Just gonna look for slightly maybe this low. Okay, we need to inverse this quick. Otherwise we're probably gonna get stopped. So this is the first rejection of this zone here. We need price to close below this. Otherwise, it's not going to look good. So we want to see price close below this fair value gap. Okay, this is nice. Putting my stops closer now. And now we can trail this out. Boom, there it is right there. And you can definitely target this liquidity zone. I just targeted this low here. Technically, this would be the low. This is weird, but that would have been low. But hey, that's not a bad entry. A 1 and 1.9 RR. So that was the first liquidity zone there. I just kind of analyzed the chart too. I said, okay, we're looking bearish on ES2 if you guys look. Oh crap, my positions are still running. Flatten. Alright, cool. But yeah, anyways, on the 5 minute time frame, I did see though, I just confirmed with myself. I said, okay, are we bearish or bullish? Well, right here we're inside this liquidity zone on the 5 minute, but we actually did take out some liquidity right here, and we also SMT'd. So basically, we have a high to a higher high. Right here, I have a high to a lower high here, SMT'd, and we're already reacting to the 5 minute. I saw we had a rejection from our 5 minute a little bit, so I went down to 1 minute. I said, screw it, and this aligns with our first zone for the day. And in this case, it played out perfect. And we had our entries kind of like right here. So that was kind of a 1 and 1.6, not bad. It was okay. Price moved just really fast, but that's all right. It happens, and it was a good trade. And basically, that is basically my trading day. I mean, 6:56 a.m., not bad at all on the West Coast. But the reason why I love the East Coast so much is because, gosh, the time market opens is at 9:30. I just love it so much. You know what I mean? And being in California, as you guys know, I'm in California, if you know that. But Yeah, it's just super, super early. Every morning I have a raspy ass voice right when I wake up. And you guys probably could tell right as soon as the live started. But yeah, look at that. Hardly any drawdown. Now we're delivering to this bullish liquidity zone. So what did I do? We waited for the first liquidity zone in the morning. Although these are stacked up like this and they're relatively small, what I basically looked for is this confirmation, right? So I went on 5 minute, I just looked at how market structure is kind of what is it telling us, right? It's telling us that we're a little bearish. So cool. I'll take this liquidity zone then. However, usually I don't like to if they're this small and they're all stacked up. There's only 3 of them here, but I ended up taking it because it aligned with my rules. And when it aligns with your rules, you got to take it. But if it doesn't align with your rules, or if you're unsure, just leave it. Don't worry about it. Just miss the trade rather than not you don't want to force a trade. And yeah, that is basically it right there. And we're 27 minutes in this session. So I got my win for the day. And usually how my strategy works is I basically I'll write this out for you. So 1 or 2 trades a day. 1 or 2 trades a day. Okay, so in this case we took 1 and it was a W. So we're done for the day. So why 1 or 2? Can I take 1 more? Technically you can, but the thing though is if I have 1 win for the day, I'm done for the day. If I have, so say if I have a day, like last week I had a day with 1 loss, then I took another trade, then I won. Okay, that's 2 trades. So if I lose my first trade, then I could take 2 trades for that day. However, if I win the first trade, I could take only 1 that day. All right, does that make sense? So there's that. And I look for the first zones that show a rejection. Look for the first 2 zones that show a rejection. Okay, from what? From oops, 9:30 to 11 o'clock a.m. Eastern time. Okay, and as you can see, this is the first zone after 9:30 that showed a rejection, which is our entry as well. Now we're likely to deliver to this liquidity zone down here. But yeah, that's literally all I look for, guys. And in this case, since these were small, I just looked for some little bit of confirmation on the 5 minute, which we got. But yeah, I mean, this simple, guys. That's all I literally look for. And my stop loss, just to show you guys, stop loss at the high or above, I should say above, the high / low of the rejection candle. And then TP, highs or lows or fair value gaps, just like this. A high or low or a fair value gap. Okay, but you don't necessarily have to do the high or low. Just go ahead and target near the high or low. All right, with that being said, I hope you guys did enjoy this. I'm going to go ahead and share this with you guys so you guys can go ahead and understand how this indicator works and how the strategy I use, basically what I do with it. Pretty damn simple, you guys. Go ahead and back test and always look at the first 2 zones that show rejection in New York session at 9:30 a.m. to 11 o'clock Eastern time. And look at your backtesting results and you're seriously going to be amazed. Okay, and I backtested this over months of data and I had like a 75% win rate just off of the first 2 zones. All right, and if you even add more confluence too, for example, like an SMT, like what I did on the 5 minute, kind of identified bearish market structure, right? Then you can go ahead and even increase your win rate from there, right? So pretty awesome, pretty simple. Hope you guys did enjoy this. But anyways, take care, guys. Have a blessed rest of your day and enjoy your weekend. See you later. Peace.